afternoon. Wow, that wasn't good enough and loud enough. Good afternoon. Lovely. That sounds like a good plan. I have a wonderful task today. I normally get grilled all the time in my life, but I'm going to turn this stage. Today, here is a consultant who's going to turn this stage, so I hope you all enjoy it. And the only one ask I have, it's a very bright light in front of me. Just want to make sure that you all have your cell phones with you, because I'm a very different kind of person. Most people tell you that if you're in a session, don't have your phones on. The world has changed. I really want you to have your phones on. The second reason you're going to love me is because I'm going to cut the crap and we are going to get to the point. So hopefully you will enjoy it. But before we get to the show, let me introduce the wonderful celebrities I have here today with me, and in no particular order. Let me start here with Sudish. Sudish, one of my oldest friends. Sudish, please join us on stage. Sudish. I'm sure you can read their bios better than I can describe, because I know Sudish is a different person than what he would like to tell you publicly, so I think we'll leave it there. Sudish runs the India Center for Bank of New York Mellon, and a great guy. I'm going to get some interesting insight from him. And from there, I'm going to move on to Alok. Alok, please join us on stage. Alok's portfolio is longer than what I have seen anywhere on this stage. He's got a fairly large portfolio, lives in the US, runs the R&D, Innovation, Delivery Center, and many things for Franklin Templeton. Alok, thank you very much for joining us today. All right, then I move on from here. Oh, that's myself. Okay, I'm here already. Let me invite Bipin. Bipin, round of applause. Louder than ever, because he is the most committed speaker we've got today. You may not know, but Bipin actually hurt himself this morning, and the doctors advised him not to get out of bed. But it's only this wonderful audience which made him come here, so round of applause for Bipin. All right. And last but not the least, truly the most important person today for me, Arjun. Arjun, please join us on stage. Okay, so what I'm going to do today is I'm going to first request all of these guys to introduce you for what they do, because they do some very, very important things in life. It helps you put things in perspective, so I'm going to request them to introduce themselves, and more importantly, give a short take on the subject which we have today to discuss, which is disruption in financial services industry. So maybe I can start with you, Sudish, and we can go in the sequence. Introduce yourself, and that's a nice Nagin dance.
I know. I set it up for myself, looks like. Good evening. My name is Sudish Panicker. I've been with BNY Mellon for a little over 8 years, primarily responsible for the BNY Mellon Operations Center that's based in India. And in terms of today's theme, where we are talking about GIC to GCC, I think we are at that point as an organization in India where the conversation is not about cost, the conversation is not about headcount, the conversation is really about other aspects of value. And values like complexity, values like expertise, values like trying to get closer to the clients and actually make a difference to what our clients ask for. So that's really what we are about in India, and then we have a tech organization within India which is also equally responsible for everything that I just spoke about. Coming to the topic, in terms of financial disruption, I think we are at that place where there are a lot of conversations around what is the services that we provide today versus what does tomorrow's services look like. Where does product and services meet for us as an organization, right? And there's a strong belief that the product for tomorrow, if you kind of think about it, as well as the service for tomorrow, is actually tech-based solutions. And that's really the way we as an organization are going to move forward. Now, where does that place us? What capabilities do we have today? How do we kind of move that journey from just being more focused on services to being more focused on products, and technology being the cornerstone of how those products operate? is, I think, one of our biggest challenges. Happy to share some thoughts about where we believe we are, what are some of the risks that we take, and what are some of the myths that all of us kind of, hear a lot, talk about a lot, and really, challenge ourselves to say, is that really true, right? A lot is said about a lot of things, and one of the things that's talked about as us as an organization, we are the world's largest custodian, right? And there's a lot of conversation around blockchain, right? And what it'll do to a custodian. So, we will have those conversations to say, is that real? How ready are organizations like us in terms of dealing with it? So look forward to a good conversation.
Hi. My name is Alok Sethi. I'm the Executive Vice President for Technology and Operations for Franklin Templeton, and I'm based in California. Franklin Templeton is an investment management company. It's a global investment management company. We manage about $730 billion of assets. 2/3 of our assets are in mutual funds, and the balance, we manage money for large institutions. So in the context of today's topic and all the various disruptors around, we as a company are very seriously focused on artificial intelligence, data sciences, machine learning, alternate data sources, both in our distribution function and in our portfolio management function. We also realize that a lot of disruption is coming through the various fintech startups. So we, in turn, are partnering with many of those startups and also investing in those startups. We have also recently set up a center in Vizag. We've always been very focused on data sciences and analytics, but this center will be focused on artificial intelligence and data sciences. In addition, in this center, we are setting up what we call a rapid development center, an opportunity for us to experiment out there outside of the Franklin Templeton ecosystem, and hence have the ability to develop fast, fail fast, and if things really work out, then we can bring them back into the enterprise. So we do fully realize that in today's day and age, we need to be extremely nimble and very fast to run our business, technology, and operations. Thank you.
Thank you.
Again, thank you, everyone. Thank you, NASSCOM, for firstly having me here. It was a short notice, but I think I was able to make it. That was a good thing. So just a little bit of brief. I'm Bipin Sahni. I live in San Francisco. I work for Wells Fargo. And the charter for me and my team, Yodlee, is to lead all the innovation and R&D function for Wells Fargo as part of the innovation group. And along with that R&D function, I also have a role where we've just created a program called Wells Fargo Startup Accelerator. I'm wearing the shirt. This is like a little promotion. The idea there is to find early stage companies to invest in them. And the point being, it's an investment not for the sake of an ROI as most bankers would think like. It's more about return on innovation value. So ideally, we work with lines of business, bring some interesting companies. We have 17 companies in our portfolio right now. Now, the reason why I'm here, because we have a team in India. I mean, I don't know how many of you know, Wells Fargo has a very decent sized team to do a lot of different functions out of India. India is a very important element of our being. We have close to 15,000 employees. I have a small team in India, which is based in Bangalore, and we have some of our team members here. The focus for us in that team is to, again, as a couple of my colleagues here mentioned, rapid prototyping, working on some cool new next generation ideas. The ideas don't have to only come from Silicon Valley. Ideas are everywhere. And we totally believe in that because, there's a reason why we set up this small innovation R&D center, a group here in Bangalore. The key is there's a lot of smart people outside the bank. That's how we look at it. And we want to connect those smart people with smart people inside the bank. Maybe very few of them in the bank, but the idea is there's a lot more smarter people outside. Now, if you were really smart, you would not be working. That's how I feel. You would have made your money and chilling out somewhere in Hawaii or Bahamas or whatever it may be. So the point is, the world still needs a lot of cool technologies, whether it's data, whether it's the next generation of authentication, use of AI, machine learning. All those pieces are key and element for how do we serve our customers. In my mind, it's all about how do you kind of cater to all these new innovative ideas. How can you really simplify the life for your customer? For us, everything is around a customer. So I give a short example. If we come up with a new idea and the thought is, if I don't have an answer, what's in it for the customer? That's a non-starter for us. So customer-driven innovation is important. And then from our perspective, my team plays with we're probably one of the only banks in the world who has a hardware R&D group where I have drones, robots. You can think about all the things which happen in Iron Man movies. Those are the things which we focus on. But how do we apply that to banking is very important. Banking is going through a change. It's not as straightforward. Simple, and we love the disruptions. Trust me, I'm more excited about the disruptions because that's woken up the whole industry. That is a good wake-up call. Key thing is, someone like Wells Fargo, we have a lot of products to offer. We want to collaborate with the right fintechs. And beyond fintechs, fintech is a very undefined word in my mind. As part of our program, we have one fintech investment. Rest of them are companies which add value to a fintech environment. So you got to think about it from a bigger picture point of view. Keeping the customer in mind is the most important thing. Keeping experience is important because without a good experience, nobody's going to use your products. So I think from that perspective, and I can speak from a Wells perspective on that. Now, going back to why we are here, and we want to talk to you and understand what it'll be good to have an interactive session if we can, because more the questions, better for us from our perspective. So thank you again for having me, and I'm going to pass the mic.
Please.
My name is Arjun Singh. When Bipin dropped out this morning, I was hastily empaneled. And now that he's bravely back, in a burst of guilt, Akhilesh has asked me to come and sit here and look beautiful. So I look after the Asia business of a company I need to introduce called Yodlee. We are one of the world's first fintech companies out of California for about 20 years. And our pioneering capability is data aggregation. And with the ability to get consumer data to a point that's required where creative solutions have been developed for consumers being so important, our platform and our APIs are very much in use both by banks who use us to offer certain solutions to consumers, and by about 500 fintechs who compete with the banks. We believe that there are about 200 financial decisions consumers make through their lives. And both banks and fintechs use the data that we can aggregate to help provide really cutting-edge solutions for consumers. So we are blessed. We have a ringside view to the disruption that has been taking place in the financial services industry. And I look forward to the perspective of our stalwarts here today and this wonderful panel as to how the best organizations in the world are going to compete with the disruption in the future.
Thank you. Thank you very much, Arjun and everyone else. I've noticed one thing. The economic principle of diminished return is at its play big time. Our first celebrity got lots of applauses, and by the time it came to Arjun, I think they kind of depleted. So can I have the round of applause? Perfect. Thank you. Thank you. Thank you very much. And I know I asked all of you to have phones in your hand, and that was a good excuse for you to not to clap, but I think keep clapping because I think these guys will need a lot of that energy, enthusiasm, and encouragement as I put them through some grilling session today. All right, so the subject for today is tackling disruption in financial services industry, and let's see how we do justice to such a broad topic. Why are we here? I'm a principle of three things. So one thing is that we are here because we want to cut the crap. There's a lot of which is being spoken, tons of English, 26 alphabets being turned around and twisted in billion possibilities to create all the crap which most people don't understand. So we are going to be straight today. The second is we'll not talk at the high level. The days of talking about 30,000 feet are over, so I know you guys talked about a lot of things which I didn't understand, by the way. So we need to peel the onion and get to a level below. And third, which is my motto, we will uncover the truth, the whole truth, and nothing but the truth today. All right, so let me set the show because every time I do the show, I actually have to buy insurance because I get hit most of the time at the end of it. I not only need to buy insurance for myself, I need to buy indemnity for all these co-panelists which I've got today here. So the first and foremost, views are personal, not just mine, for these guys too. So while they have advertised the industry and company they work for very, very well, I think they're not representing that for the next 30 minutes. So they are going to represent not even their own views, sometimes even stretched views, and I'm going to talk about why they are going to be in that situation where we'll put them only and only for your benefit because we want to cut the crap. The second one, I want you to consider, I know it's a big ask when you come to NASSCOM, it's a boring place, it's nowhere close to call Vegas, but consider for next 30 minutes you're in Vegas because what happens in Vegas stays in Vegas, so don't take anything out of this room, whatever these guys say, assume it's here, leave it here, take the insight, forget the facts. Okay. The third one, as I mentioned, these guys, I'm going to put them to a little bit of stretch, okay? It's one of those, what they call that truth serum, the polygraphy test, and many of these things. So in that, if they end up talking about all those things which they do only after 6 pegs down, don't assume that they were serious about it, okay? So give them that indemnity, and I hope I buy that indemnity for all of you, and thank you very much for being that wonderful audience. I thought of it saying that, you know, when I'm asked to do such a subject, I would like to play like a Harvey Specter, and I'm sure you would like me to be as sharp as he is in this show called Suit, but life isn't as sexy for me, and I'm rather what I call the bleep ki bleep. Okay, bleep ki bleep is not a vulgar word, by the way. It's not abuse. It's just that the first word represents a political party, which I didn't want to put on a NASSCOM show. And then the third word, if I put it out, looks like a TV show, which it is not. All right, so we'll call it bleep ki bleep. All right? And I may look like this guy. I only love this guy's hairstyle, nothing more. I wish I had this jet black hair, which never go like this all the time. But everything else I possibly don't like about him, except this one. All right. So, of course, they've all gone through the swan ceremony. They are all going to talk about the truth, the whole truth, and nothing but the truth. There are some rules of the game, and this is the most constraining part, because as they say that as you grow in the organizational hierarchy, the airtime you consume in a meeting is higher. I'm not going to give them this liberty today. Thank you, I love it. Okay, so they have to answer every question in 180 seconds or less. You know, it's like say that, you know, if you can't make it beautiful, make it big. We want beautiful, right? So don't make it big. And I'm going to put some allegation against these guys, which I've collected from all of you, by the way. I'm sure the views are represented not by me, but this audience you're going to hear. But I don't want anything more than 2 people to represent that defense. Of course, as we mentioned, we got the 3 accused here today, which is Sudish and Bipin and Alok. We've got a very luminary Arjun here. Is going to be the judge, and he's going to carry the final verdict. So I kind of give you a little bit of respite to possibly not get into this tough situation for a few minutes. Okay, rules of the game further. There are some prohibited phrases. None of you can speak any of the phrases. I know you can't read it, but I'll read it for you. Whatever it is you're talking about. And whatever I say, you can't say that this is complete BS. You can't accuse me for saying what I say. And you can't ask the source for all the nonsense. And of course, you can't say that I'm out of my mind, and you can't quit. Okay? So those are the 6 golden phrases which are prohibited.
So do you guys realize my initials are BS?
Okay. All right, so keep calm and let's play. All right? I'm going to test some of you in the room just to profile so that I can ask the questions that are relevant. I'm highly digital. I like to personalize content. So hopefully try that. So on your phones, go to www.menti.com. It'll ask you a 6-digit code. Put that, which is 408686, and you get this question. I've already got 9 smart people in the room which have got there. But those of you who haven't got there, just go there because I want to test how often do you visit your bank. I've got about 2/3 of the people saying once in 6 months, and I got 3% unfortunate people who actually work for a bank and have to go for the bank every day.
Exactly.
Okay, I've got 45 responses. I'm sure the room is full with 200 people, so a little bit more. I'll just get the gist of the kind of profile we are dealing with. Of course, we have more and more people who I assumed are not the one who actually go to the bank. All right, great. Okay, 55, please come up a little bit more. We are losing time. Okay, thank you, but I think I get statistically good sample. About 2/3 don't go to bank very often. Okay, moving on to the next one. Think of yourself and saying, what is your principal method of making payment in today's time? Principal method. I'm sure you do all, but what is your principal method? Cash, check, debit card, credit card, internet banking, mobile wallet, and some smart guys using cryptocurrency. And there are some people who don't want to pay at all, so just live on credit. Okay, all right, lots of plastic here. Internet banking, perfect, perfect, wonderful. I did not expect any different. 105 responses, keep going, keep going. All right, okay, we get the median, it's pretty good. Wow, wonderful. Lots of plastic and internet banking here. Let's move on to turning to a visionary as to how our world of disruption is going to look like. And I'm going to tell you a beautiful quote from Bill Gates, which he said in 1998. Eventually, and the underlined word is eventually, everyone's business card will have an email address. He said that about 20 years ago. So I consider him visionary because it's come true today. Let's also say what else he said. And he said that banking is necessary, banks are not. So if you have a good reason to believe that his first statement came true, there's a good chance that his second statement may come true. So that's the kind of world which we are living in. As I mentioned to you, these guys represent different industry. We've got custodians, we've got asset management companies, we've got universal banks. But for today's discussion, it's impossible for me to cover a vast subject like financial services whole. So we're going to cover like the bank, okay, the bank which we are used to. So we're going to talk about how does the bank look like. I'll kill the disruption. So in my view, the banks in today's world are being eaten up by telcos. And the telcos are being eaten up by all these OTT players, which is like the WhatsApp and many other things. And I think on top of all of them, the big Pac-Man is the Apple and Google. They have the data, and I think this is the kind of disruption. Of course, there's an underfire of Bitcoin somewhere else going on further. If you look at it, every part of the financial services industry is getting disrupted, be it the lending club, or be it the Paytm, or the Cabbage, and many others. So the fintech companies are kind of giving tough time. Okay. If you only looked at the bank are also becoming the neo-banks, which is the digital bank, no branch, deep branch bank, and all of that. All of that is happening. And this is what I tell these boardroom members, which is the phrase I picked up from Mike Tyson, says, everyone has a plan till they get punched in the face. And let's see, and here is my view that the traditional way of working is getting challenged in a big time. And guys, the bleep ki bleep allegation is that the highly paid top executive of large financial institutions are fooling the investors that they have a strategy in place to deal with the disruption. I actually don't believe that. Defense.
All right, so this is deja vu now, right? It's partially true. And
allegation accepted.
Yeah, so it's partially true. My view of financial services, and when you segregate financial services between retail and non-retail, if I can just keep it simple. When you look at retail, I think it's coverage, it's scale that drives a lot more of that disruption because that's the demand of the customer, and that's your way to kind of penetrate different markets. So some of that disruption lends itself versus when you look at some of the non-retail sectors, there isn't that push for financial services to change. So many times financial services are waiting for someone to make that move and come and disrupt, because if you really look at some of that space, there are very few financial services companies which have actually cannibalized themselves. And then you start asking the question saying, why didn't they cannibalize themselves? And perhaps it is because of an earlier session that we had where someone spoke about you need to have a purpose, and sometimes that purpose drives the change that you make. And maybe on the non-retail side, a lot of those financial services have not been able to articulate what that change of purpose is, right? And therefore, they're still waiting for disruption to hit them and react versus cannibalizing themselves.
Great point. Round of applause. There is some reality here that some of them are getting there, but not all. I think that's a reality. Alok, please.
So we do have a proper corporate strategy in place.
Thank you. You're not representing Templeton here, so you can do what you like to do.
No, but I am. And you're recording it, so.
Here comes risk management.
That too.
Thank you, thank you.
Yeah. So we have a proper corporate strategy in place, and we are accountable to our board of directors. We give them a proper scorecard every quarter and go through all the significant corporate initiatives that we've put in place. And many of them are focused around the changes that are taking place in the marketplace. So we are focused on the changing distribution landscape. We are focused on how do we leverage fintechs and artificial intelligence that I spoke about. We are focused on how we improve our investment returns, and for that, what are the different tools we would use.
Very articulate answer to an allegation. I've got evidence. There is a corporate strategy. There is a review plan. You have a scorecard every quarter, and you know who you are competing with. Round of applause. Thank you so much. Okay, let me push it a little bit further. I know I didn't come to you because it's only 2 defendants for each allegation. Why now? Why are we bothered a little bit more now? So I think in my view, technology is changing. The new business models are emerging. But I think the fundamental thing which is shifting is demographics. The customer, the people who we are servicing are changing big time. And I want to talk to you about this one. This is what you see on the left side is a picture which was taken on the Pope ceremony in 2005. And on the right side, you see the picture. Same position, same place, 8 years hence. The eyes has been replaced by cameras and shots. So that's the kind of world which we're moving in. I know this audience is like me, who are like the dinosaurs, many of you at least, but that's the world change. If you look at it, this is of course like a fake card, but somebody made a matrimonial card saying that, you know, please, Paytm is accepted, and if you can't come in to collect the gifts, we will send you some Sodexo online vouchers, and you can kind of get the Bikaner wala mithai or something which you like, but that's how the world is these days. Okay, this is my evidence for the next allegation. Here I've picked up the 3 financial institutions' mobile banking apps. And of course, I've completely de-identified. So the first one is a Big Bank 1. And you can see the App Store score they've got on the user rating is 2.7. The second one, even bigger bank, and the rating which they've got is 1.7. And the third one is a new age payment bank, and the rating they've got is 3.9. And here is my bleep ki bleep allegation. Large financial institutions are spending significant money to build digital businesses and channels, but these businesses and channels struggle to deliver value and fail to deliver customer delight. Defense.
So I can take that. So yes, I like the statement, but I'd love to also say that that's actually not totally true.
Wonderful.
So the point I'm trying to make is, if you look at the technology segments, you know, which the big banks are applying, it's actually takes a little while. And again, you know, full credit to the fintechs and the, you know, disruptors and, as you call them, as the challenger banks worldwide. The key thing is they're still learning how to get regulated. There's another element which, you know, we should talk about is regulation plays a very important role in if you want to come into the financial services industry. And I think most of you know that. The key, another element for us is banks of our size are, you know, we've grown a lot. And I think so it's going back to the basics. How do you become more nimble to create something new? So most banks, in my mind, at least in the US, are actually carving out such teams which are focused on innovation. Innovation was not one of the core pillars until, you know, last 5-7 years. If you look at any bank, top bank vision statement, I think that's now been included because seeing what's happening in the world, it makes sense. They may move a little slowly, but they usually surprise that some of those banks will actually catch up and leapfrog. And I'll give you an example of that. How many of you have heard of a company called Venmo? Right? Some of you probably have used it also, right? The point is, very good company, good acquisition by PayPal. Guess what? The banks decided we'll work together to create something bigger. Exactly what happened. The number and the volumes of transactions, what we created with Zelle, where we brought 4 banks together. So the moment the big banks start combining things together, there's a bigger ecosystem which is evolving around it. So now the volumes of Zelle are looking slightly better than Venmo. And if you get 4 or 5 banks, at least in the US market, you get 90% of the customers actually using those banks. So the market segment is far superior for us to kind of play into that space.
Wonderful. I think I like that answer. Thank you so much.
Thank you.
Thank you. Alok.
So what I would say is that there is no doubt that, and I agree with the part Bipin made, that obviously as large organizations and somewhat legacy organizations, we cannot be as nimble as some of the new software-led, software-driven companies. So there's that big difference. But the way we address that is, and what we are attempting to do is, that we partner with them.
Exactly.
They on their own would probably not be able to attract the kind of customers that we have. And we have tons of customers, and they've been with us for very long. So our idea is that, okay, can we figure out partnerships? And through that, we are able to deliver that experience.
So alliance, work together, work on each other.
Can I just add one more point?
Please.
In terms of partnerships, I think that's a very valid statement because, having, like in our case, having 70 million customers, who wouldn't want to sell their service to a 17 million customer bank? Imagine that. Imagine that we can actually build many more things. And and again, from my background and from my work at Wells for 23 years, when the cloud thing happened, all the companies, the good fintechs are saying, oh, we're going to be in the cloud space because, that's the hottest buzzword, right? The moment they launched their services, then they realized the fact that, oh, we can't get as many customers, but we may get a customer base once we partner with the bank. Next model was, oh, we can do our solution on-prem. So the models have shifted because, at the end of the day, even companies like Lending Club, Lending Tree, all the lending P2P providers, they're now beginning to offer their platforms to banks of our size, asking us to participate on their platforms. It's about the customer at the end of the day. Who has the customer? We don't sell one product, we sell 400 products. So think about that. Most of the fintechs and the startups are focused on one solution or max 2 solutions. That's their base. Here we are, 400 products, 70 million customers, and a lot of money to invest in startups. So that's why we created this program to kind of bring those companies into our program so that we can leverage them, and they're actually doing well. Most of our portfolio companies have gone on to raise more money. Their valuations are different. Now, there are actually other banks investing in them. So the partnership angle is awesome. And again, this is a program which we've created is not financially driven. It's driven for innovation. And I think we totally respect the disruptions happening. No doubt. I'm so glad this is happening because that's given us the next phase of innovation and new ideas. An idea is to simplify banking. It should be seamless, it should be faster, it should be secure, it should be easy to use. I think that's where the fundamentals are. And we've made it complicated. And who has made it complicated? It's people like us. I mean, human beings have made it complicated. We've made our own lives complicated, by the way. So I think if people are trying to solve their problem, that's good for us to absorb and accept and collaborate with them.
This is the best group I've got here. They accept a lot of reality. Thank you so much. All right, moving on. The third area which I'm moving on to is that the customers look for transparency, a lot of visibility in certain things. And the customers look new way of getting advice. So this is, I'm sure many of you are familiar with the Siri, the Google Now, the Cortana, and all of that. And they give recommendation. I'm going to come to here about, actually just let me stay on this slide. I like to tell story, and here is a story of one of my friend called Sumit, and you may actually YouTube him and you'll find a very nice video. So search for Sumit stand-up comedian work, and you will find this video I'm talking about. He actually is like many of us. He did a BTech, he did MBA, he was doing well, so he says, what can I do? He joined a bank. And when he joined a bank, he was a smart person to talk to, and he was made the relationship manager for a lot of wealthy people like you. And here is his constant struggle with himself, and here is his also guilt feeling. He says, I go to these super rich people who drive BMW 7 Series, and here am I taking an Uber pool to get there. And I tell those guys saying that you guys are successful, you made millions, but you don't know how to make more money on your money. But here am I, who's come on Uber pool, with the God's grace and my mother's overconfidence, I can actually tell you how to make money on your money. And that is the bizarre situation we have in the world of AI, where technology could possibly recommend a better financial product. We are living with this world. And therefore, I'm going to stick with this one. This is actually could have put a lot of trouble here in time. So all of this is impacting. So in my view, the next allegation which I want to do is, in the interest of time, I'm going to skip this one as well, is the regulator is a big guy here. And my allegation to you is the industry has created artificial entry barriers by having a smart regulator and strong regulator, and it helps inefficient financial institutions to survive.
I wouldn't agree to that. I mean, you do need regulations, don't get me wrong. But I think so, and I can speak about it here. As we are evolving and innovating with, partnerships and other things, I think it's a point where some of the banks and us, we actually do it. We do spend time with regulators for, again, as everybody's going through this learning curve, even they need that. They're human beings like us. They're no different. Nobody has sent them from another planet. The point is, you've got to sit down with them. You've got to show them what you're working on. Get a little bit of approval / blessing, because you kind of need that at the end of the day. Now, it's from an innovation perspective, it's very important because you know what? There's so many elements when you talk about innovation, whether it's in AI, whether it's how you're doing authenticating a customer, what you're doing for credit lending facilities. I mean, it's such a broad spectrum that it's kind of important to have that kind of an oversight. It's more of an oversight. Now, in case of Wells Fargo, what we've done in this space is we've created a term called responsible innovation lifecycle. I don't know how many of you have, but the idea there is to have a regulatory and a risk element embedded into what we do. It's not an open field because you know what? From an R&D perspective, I'm not actually dealing with a lot of customer data, actually none, because I'm in an R&D lab-like environment. The point is when things move from an R&D to production, you need to follow the guidelines. There is no second way of doing things. There's no shortcuts in life there because that's where you get screwed as a bank. Because you do something wrong, you'll be penalized for it. So the point is that regulatory piece is important. The responsible innovation lifecycle is very important. As if you guys have an R&D team in your enterprise or companies, I think that's an important element to keep in mind, personally. And I don't know, I saw the Siri slide. I don't know what's related to that.
I skipped that delegation because you've got 3 minutes to go, so I'm conscious of...
I have something to speak on that.
Please.
Yeah. So, as you guys saw the Siri thing, right? Siri is awesome, but there is next few versions of things which are coming out. We've actually helped in spinning out a company which was actually created by Stanford Research, a new company called Casisto. It is based on the same Siri platform, but focused on financial services. So you're going to see more of these next generation partnerships and collaborations, as we talked earlier about, partnering with, fintechs. We're also partnering with academics. So Stanford, MIT, Wharton, IITs. I mean, I have some of my folks visiting some IITs this week. Point is, there's so much talent everywhere in the world. How do you bring the talent so that that talent can be actually commercialized from their perspective? But then we are the users and adopters of some of these technologies as we go along.
Thank you, Bipin, for addressing that Siri point. That's pretty nice. Thank you so much. I'm happy to see some more stuff coming.
Yeah, when you look at financial services, right, trust is the hotbed of any financial services. And, regulators kind of play the role of that custodian of trust, right, in that ecosystem. Will regulators continue to play the role that they're playing? Regulators will change. And the way the regulators will change, maybe faster than some of us, is when smart people in this room, most smart people in this room actually join the regulators, right? And that's really how regulators will change as well. And I think in many of the sessions till now, I think we've all agreed that we are all going into an insane world. And in that insane world, it's probably going to be those smarter regulators who will bring sanity in.
Thank you so much. Please.
I think a very good point. Again, trust is important. Regulations are important too. And educating, that was actually the whole point is how do you get them educated into this space? Because they're learning. You've got to be with them. And don't, from our perspective, yes, I'm sure you guys have heard and read a lot about Wells Fargo, but the point is it's important to have regulators kind of looking at what you're doing and partnering with you. Some of the regulators are further along, like UK, Europe. You have all the specifications they've defined, right? We're beginning to all use them globally. I think that's the same impact needs to happen in the US. And it'll happen. It's just they talk to each other. And actually, that's beginning to happen now. So you'll see more changes coming across the board.
Thank you so much. I've got 53 seconds to go, but I've bought 5 minutes extra because I think I do want to place my last punch. Okay, all right. So There's another thing which I have as an allegation, which I'll not request these guys to defend, but I think it's for this audience to kind of consider before I get to my last one, is I believe that the big boys in town have been wrongly classified. So if you look at what are the big outsourcing companies in India, you can name them by looking at either their market capitalization or by looking at what their revenue and profitability is. How do you figure out who are the big boys in town who run the largest GIC? The only measure so far has been how many bodies you hire. And that's been, in my view, the allegation that people have been wrongly incentivized to create large centers which are by design efficient because that's the only way you are called successful. Sorry, I'm not going to let you guys defend that, but I think this is, in the interest of time, I'm going to get to the last one. And I think this one is important for you to consider. In my view, the biggest allegation I have against you is that you guys are killing the startup confidence. And the point I'm making is that the large institution, because they've got large money, large vision, large airtime, they end up creating new proof of concept. All banks in the world are today saying that we will create a blockchain proof of concept. And my belief is that they deliberately fail. They design the program to fail. And when they fail, the startup community says, oh, if these guys couldn't do it, there is no way we can do it, and they get no funding. So my conspiracy theory is that you guys are killing startup confidence. I'm sure you're kind of eager to get out of your chair and talk about it, but that's the allegation.
You are giving us too much credit.
Oh, wow, that's wonderful.
Hey, you guys see the shirt I'm wearing? It says something here, right? So I don't agree to his statement totally.
Of course, you don't agree to anything, yes.
Yeah.
But
No, but seriously, I mean, you make a point. But the fact is that the startup community is doing an amazing job.
Yeah.
And I can only see them develop and thrive over the years. And as I've said earlier, we would prefer to partner with them, invest in them, learn from them, and that's the way we think we will all succeed.
So I have a story to tell on this point.
Please.
So we bring in a lot of startups into the bank. Proof of concepts is the standard word. He mentioned it. We do proof of concepts, but based on lines of business interest. And if there is an interest, we then potentially say, okay, does it make sense for us to put a little seed capital? And we put in up to $1 million of seed capital in each startup. And the startup could be anywhere in the world. Like we have companies in Singapore we've invested in. We're looking at some awesome companies out of India. Your data lake, I wish I could have attended it. I have actually had a couple of companies which are actually doing something in the encryption space there. So the point I'm trying to make is when we bring a company from like a startup to a line of business, the technology leadership team typically says, oh, you can have the 20, 30 people come and work on this POC for us. Like there is 2 people in this company. So the point is, the innovation group, gets involved with these conversations where we make sure that the conversation is very well understood and the program is very well managed. Because it's the misconception that, a startup should have all their people working for them. You're not one of those big shops. You're not Oracle, IBM, Microsoft, or KPMG for that matter. The point I'm trying to make is, it's no 50 people and 100 people. It's 2 people in a company which can make a company happen too, by the way. So I think you've got to play a role where you identify a company, don't kill them. I mean, his point, I don't agree to his point on this one, because do not kill them because they are your future. That's how I look at it.
Well defended, well defended. Thank you so much. Sudish, you want to go on this last one?
Yeah, Akhilesh, not on this one particularly, but none of your rules for this panel said we couldn't challenge you. Right? So here's an allegation from our side, which is it Big Fours and research companies who are actually drumming this artificially to say the world is changing, blockchain will take over?
So, Sudish, thank you so much for calling the bluff out. But if I admit it publicly, I'll have no job. I bought you all guys the indemnity, but you didn't give me any. So, but truly, I think there is a reality and there is an over-reality. And I come from the business of consulting. And we like to sometimes overhype, and I'm generalizing, sorry, on behalf of the industry. But I think we, in the garbage of trying to say we are looking at the world a few years hence and what we can see, I think my humble response to that is, yes, the world is changing faster than what we can imagine, and we can only see as far as whatever we can believe the world is going to look like, I can certainly tell you that it will be something, but not that. But I love your allegation. Thank you so much. With that, let me now invite our most honorary judge, Arjun. You heard my allegation and you heard their responses. How do you kind of show your verdict?
The pleasure of the IPL in India is that it allows all of us to sit on the couch, drink beer, and not talk to our spouses for 45 days. There are many plots and subplots, including the wounded dinosaurs like Gale and Watson, making it big. But the one that fascinates me is how the top players like AB and Gale target the best bowlers of the opposition to truly take their team forward. That's their strategy. So what I was listening for today was, how do these wounded dinosaurs on stage actually do not just defensive strategies, what is their offensive strategy to make sure that they endure and win in an ever-changing world? And what I liked in this discussion with those superb provocative questions by Akhilesh is that it was not a discussion about specific technologies. It was a discussion about approach and strategy and about how these large institutions are leveraging their greatest strengths, which are they have control of large consumer bases, and they're finding ways to partner with startups who, the truth is that other than a very select few, are really struggling because they don't have that access to consumers. And this is actually what 95% of the startup world is looking for, is the access through the large incumbents. And in my opinion, this is a winning strategy to compete with the startups and play along with the startups to jointly bring innovation into the future world. I think the topic on regulation was, I think the banks are doing a lot behind the scenes with the regulators and with Donald Trump, which is not quite covered. But I do think that otherwise the strategy is a very germane one. It only talked, though, about the disruption from the startups. It didn't talk about what's going to happen with Amazon and Google. And let's wait and watch that chapter unfold. Thank you very much for that brilliant panel. And thank you, Akhilesh.
Thank you. Before you all leave, my sincere thank you for playing along. I know it was the most difficult thing they could have ever been put through. I know this is truly, thank you so much. And I apologize if I've casted some wrong statement. None of them belong. Here is the research which finally says, by the way, that the financial institutions are backbone of economy. They deliver excellent value, have been a driver of innovation, and regulators create balance. And by the way, thank you so much. I'm sure you enjoyed this session. You've been an amazing audience. I truly did, and I look forward to come back next year again. Thank you so much.